What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner. Happy Wednesday. We are going to go over the Bitcoin price. Why is it dipping? Headwinds, tailwinds for Bitcoin here heading into Q4. The first couple days here have not been very good, but we're going to take a look at the chart. We're going to take a look at other things. We're going to take a look at Tom Lee was on Squawk Box this morning, and he's making a lot more sense to me recently. So we're going to listen to that video. And finally, we're going to wrap it up with the geopolitical piece that I just put out on bitcoinandmarkets.com. It is also a standalone video on Bitcoin on my YouTube. So if you're watching this on YouTube later, check out that standalone video, trying something new and see what people think about that. But let's go ahead and share the screen and jump into it. Let's go right into the Bitcoin chart. And I am going to do this view, I think. Tell me what you guys think of these different views. But okay, so what we have here is the Bitcoin chart. You can see the U.S. election, less than 35 days away now. They had the VP candidate or debate last night, and I did watch it. It was pretty good. I mean, I think J.D. Vance is a great populist candidate. Disclaimer, I don't vote. That way I tell myself that I can be more objective if I don't pick a side enough to vote. I can just look at what's going on and kind of diagnose that for the markets. Okay, so that's just my way of handling it and doing it. Everybody is free, of course, to make their own decisions. This is a fairly big period globally, not just in the United States, but where global Marxists have tried to take over and populists are trying to fight back. And so it's totally acceptable, obviously, if you guys vote. But I just do that. I just don't do that so I can stay objective. But the debate was okay. J.D. Vance is a great populist candidate, like I said. And man, if he is going to be the next 4 years after a Trump victory, that is just signaling what is coming for the United States. Anti-war, more of a trust busting, isolationist, non-interventionist, that kind of thing. And so we could go another 20 years with that type of policy dominating U.S. politics. And if that's the case, I mean, it's playing right into my geopolitical and macro framework where we are going into an era of deglobalization, but that's not necessarily good. Okay. Or, I mean, not deglobalization, because obviously deglobalization is bad, but an era of multipolar order. But that multipolar order is going to be good for the United States, on par or on net with everybody else. And so, we're entering a period where we're going to see a lot of political change. And so I try to stay up on that. But it's also important for Bitcoin. I just saw another headline out there. And they were talking about now there's growing bipartisan support for a Bitcoin reserve in the United States. So, this type of stuff matters. But okay, let's take a look at the chart. 200-day in orange, 50-day in blue. You can see that candle yesterday bounced between the 250, which is pretty interesting. Haven't seen that very often, but that is what happened yesterday. Big down day for the first day of October. Down here right now, struggling to hold that 50-day moving average. These levels are important, okay? A lot of people don't believe in TA, but, if this breaks, 58K gang is back. Sorry to say it, guys. 58K gang is back if this closes and, closes below the 50-day moving average. Anything can happen, though, with the Bitcoin price, and I'm not too worried about it for several reasons. First reason, I am going to bring up actually a chart, and it's this one. And we're going to go through this article here in a minute. But geopolitical stress or geopolitical risk with the Iran situation yesterday. I wrote a piece back here after October 7th when Bitcoin kind of dipped a little bit. If you can see right here, it dipped a little bit. And there was a bunch of macro mediocre macro pundits out there saying, "Oh, look, this proves Bitcoin's not a geopolitical hedge." What the, then it just went up. Okay, so that could be similar to right now because there's a lot of talk out there. Oh, look, Bitcoin is not a geopolitical hedge. Gold is going up, but Bitcoin is not going up. Gold is better. Bitcoin is just a bubble or whatever their thinking is. So we lived through this almost exactly a year ago, which is interesting that they both of these incidents happened in October. But we're going to be taking a closer look at that here in a minute. Another quick chart here. Let's share this tab and we'll zoom in a little bit on this because if I make it bigger, okay, so this is total liquidations charts, and you can see this big bar here is August 5th, and we just had a very significant long liquidation. A lot of people were saying, up, including myself, that we're going up. If we break the 200-day moving average, we're going up. Well, we did that, and we liquidated a lot of longs here. This is not a free ride. So most people or the market is going to take the route of most pain for most people. But this is a significant liquidation. And as you can see, going back here in the last several months, these big days are standalone days. So big day here. I guess there's two big days right here, but there's one significant one. And then there was 2 days here too. So they're not standalone necessarily, but they're very short in duration. It's not like a long, prolonged sell-off. But so this is bullish from this point, is what I'm trying to say. These long liquidations. So that's the one I wanted to bring up. Okay, let's go back to the charts and we can take a look at a few other things, a few other assets out there. I have not looked at this one actually. Oh my gosh, Ethereum is just getting crushed versus Bitcoin back under 0.04, tagged the 50-day moving average. Once again, guys, that 50-day moving average is a extremely critical level in these markets. Tag that and is now headed lower once again. All of this hype about the altcoin sector. I mean, that's another thing too. So not only was Bitcoin really bullish and very long, but all of these altcoins had just started their pumping. I don't know if you guys noticed this on Twitter, but there was a ton of accounts that came out of the woodwork and started pumping altcoins, pumping Solana, pumped all these other meme coins that I don't even know about, pumped XRP with Ripple. That was a big one that really was pumped over the last week or so. And so all of these things were very long and just ready to get liquidated. And so a lot of these markets like this can have an effect on the Bitcoin price as well, because especially Ethereum, not so much the other coins, but Ethereum there will be bots that are trading the spread. And when the spread gets out of whack, they will try to trade that spread, and that will close that spread. That is what keeps Bitcoin and Ethereum more coupled. So Ethereum trades off Bitcoin fundamentals for the most part, but it also provides this drag, if you will, on the Bitcoin price because Ethereum is garbage and it has these bots that trade the spread. But anyway, so that's that with Ethereum. Let's take a look at gold. If gold is a geopolitical hedge, let's see how it's doing here. Down on the day, actually, just a little bit. Big day yesterday. I mean, just look at this candle yesterday, guys. This is going to be a ongoing theme. This candle for Ethereum yesterday. And let me get rid of these lines because these aren't super important or anything. All right. So that candle yesterday, yes, it was a positive candle, but it did not hit new highs. And it's down today. Okay. So if this was a pretty major missile barrage on Israel, major escalation in the region, but gold didn't make a new high, even a new 7-day high. Something's a little, and this is supposed to be a geopolitical hedge, but it didn't even make a 7-day high. Hmm. Something kind of fishy going on here about this. Let's take a look at the dollar. The dollar has had a nice little bounce here, but we're coming back up in this region right there where it has provided resistance in the past. Let's bring that 50-day moving average back out here. Approaching that 50-day moving average. Look at that. Very interesting. So if the dollar can break through the 50-day moving average, it's going higher. And if you guys aren't familiar with my content, I've been a dollar bull relative to other currencies. Okay. Not relative to Bitcoin, not relative to gold, not even relative to stocks, but relative to other currencies. And that has really put me at odds with the Bitcoin space in general. And it has turned out to be pretty true, though. So we'll see if we can hold this bottom. Let's take a look at the RSI. So, yeah, look at this RSI here. This is on the dollar. This is the daily, but there is a clear divergence here on the dollar. So that, coming up to a very critical juncture here for the rest of the week. Can it break the 50-day moving average? If it can, it's going much higher, significantly higher, like 5% higher or so. And if it can't, then we might look to continue this divergence with a few lower lows, but higher highs on the RSI. That will continue that divergence until eventually it breaks out. But right now, it's looking like this is a critical juncture coming up here on the DXY, which also plays into our talk about recession, which we'll get into here in a second. Okay. Also, guys, I am live streaming on YouTube, Rumble, Twitter, and Telegram. I'm checking my comments. John Delaney says, 58K gang forever. Forever. Oh, man. Some people are hating that meme and stuff. I guess I had to feign my disgust. I hate that meme, 58K gang. We're going up from here, baby. No. 58K gang. If we close below the 50-day moving average, they're probably going to get a chance to put some more memes on Twitter with the Grim Reaper going down the hallway, and it's just going to be 58, 58, 58, 58. Yeah. Tom at K Friends. Hey, buddy. Vitalik is pulling a slow motion rug pull. Yeah, I've heard that he sold a lot of coins, but I also read rumors. These are Bitcoin industry rumors that he broke up with his girlfriend. So I don't know if he's going to be spending any more money, if he's going to be, putting his nose to the grindstone and trying to figure out some marketing scams for Ethereum. But maybe he's done selling for the time being. But I did see that he had been selling recently. All right. Let's go back to the charts here. That was the dollar. One big thing was JPY that happened today. So JPY, Bank of Japan, they did not continue to raise rates. So they had raised rates from 0 to 0.1. That was their first rate hike, guys. 10 basis points. Now that's some quantitative raising. It's not the cookie cutter 25 bips that the Fed uses, the ECB uses, the Bank of Canada uses, UK uses. It's not that cookie cutter 25 basis points. It was 10 basis points. Then they raised it to 25 basis points after that on their second hike. And today, or was it today? Anyway, they refused to, or they did not raise it one more time. So that is why the DXY here, or sorry, the JPY is rallying a little bit. Or sorry, Jesus. The JPY it's weakening against the dollar. And a lot of people too. I posted this on Twitter and I posted on Telegram earlier today saying, look, what happened to the carry trade being over? Because I saw some headlines about, the carry trade is back. Well, come on, guys. A $20 trillion trade gets unwound And there's all these FUD articles out. The carry trade is over. Japan is raising rates, decreasing that spread between US interest rates and Japanese interest rates, which will squeeze the carry trade. Half of the carry trade is unwound. Three-quarters of the carry trade is unwound. And the whole time I'm saying, no, no, this has nothing to do with the carry trade. I mean, there's probably a little bit something to do with the carry trade, but come on. It's a $20 trillion trade. If that was really being unwound back then, the market would have crashed for sure. But it wasn't. And now the carry trade is back, people. It's back on. $20 trillion back on the carry trade. I mean, it's kind of ridiculous. We'll see how this develops, but I overall over the next 10, 20 years, I expect Japan to do least bad other than the United States. So out of, I would say maybe the top 5 economies, US and Japan will do the least bad versus the others. And so that should, I mean, it will do worse against the US. So that exchange rate will probably weaken, but we'll have to see how that develops. Okay, CNY. Now let's check the US 10-year. And if you guys know, we talked about this several times over the last couple weeks, and especially since the FOMC and the rate cut, that's when I drew this horrendous orange curve and said, I can see something going like this, because as you cut rates, there's a temporary period of jubilation that the Fed is acting. Maybe they're going to succeed and they're going to save the market. So there's a period of jubilation. And then you realize, oh crap, no, this isn't working. It's actually getting worse. And boom, then you fall, then you really fall. So that's why I drew this orange line in here. Also, the 50-day moving average, just like the dollar, is coming down right into this zone, which is, again, interesting. US 10-year and dollar are both approaching the 50-day. Bitcoin is also on the 50-day moving average. I mean, you can see how the entire market is kind of on edge right here. Everything is testing these trends that have been going for a long period. Like, let's see how long it's been. It's been under the 50-day moving average. I mean, it got out here, but it's been under the 50-day moving average since June. Okay. So this is kind of a period where everyone's looking at the market. Everything's approaching that 50-day moving average, which is seen as the 50-yard line. Are you bullish or bearish, right? Right now, the US 10-year, the yields are bearish. The prices are opposite of the yields. So the prices are bullish. But, anything can happen right now. Are we going to, are these things going to get rejected by the 50-day and continue the other way, or what? What's going to happen? Okay, let's go down to oil. And oil is very similar with gold. So when I was talking about gold and the geopolitical risk, oh, look at this 50-day moving average for oil too. Man, everything is right there. This performance yesterday, selling off before the attacks, then the attacks happened and it rallied, but then it closed the day down a little bit off of the highs. Today, kind of got up there, came on back. But is this, maybe if you look at it like this is what you see on a lot of places. They'll show you, let me get rid of these moving averages. You'll see something like this. Oil spikes on the day. See that? And it was what is that? A $4 spike. But let's zoom out here, guys. Let's zoom out. Was that really a spike? No, not really. It just got back to this long-term trend line. Also, the 50-day moving average, if we bring that back up, the 50-day moving average, testing it once again. This is not like super strong. This candle should tell you that this isn't really geopolitical stress going on right now. If I would change my opinion if we were like this. So from this assassination in Iran that happened, if we came up like this, maybe tested right there, and we were up here, okay? Now, if we were up here and then we rallied $4 on the day, so that last day would, come up into this zone, I would be much more significantly concerned about geopolitical risk. But we are so far down here in very bearish territory, trying to, with tons of resistance above us, above the price. It doesn't look like it's going to be confirming any geopolitical risk soon, and we will go over that article here in a minute. Okay, S&P 500 green on the day. Now this one is not near that 50-day moving average. What about the Dow Jones? Not near the 50-day moving average. NASDAQ, same. So overall green day for stocks after yesterday's stuff with Iran. So that's what I have for the live charts. Let me take a look at the comments if there are any. No new comments. Let me check Telegram. Nothing in there. Guys, again, I am live streaming on YouTube, Rumble, Twitter, and Telegram. Check out the YouTube and the Rumble. Like, comment, subscribe. Trying to grow those subscribers over there. So I appreciate that. All right. Let's go into the next thing, and that is going to be this tweet from Squawk Box and this video with Tom Lee. I'm going to make sure that I have all my levels up. Let's see. Okay. If it's too loud, somebody in the comments tell me, but we're going to start this from the beginning. And here we go.
People forget, I think, but your outlook and views are always nuanced to some extent, Tom. So last time you were on, after being pretty bullish on small caps through the end of the year, I wouldn't say you didn't change that long-term view, but you did express some near-term caution. And these people want to know, the people that follow you, the people that watch Squawk Box, they want to know exactly what to do every minute of every day. So it looked to them like you had waffled on your long-term view. And you're going to say the same thing today. I think near-term, you acknowledge that there could be some bumpiness, choppiness, but by the end of the year, you think 6,000 on the S&P.
That's right. I think we're still in the midst of a very tricky period because we've got the election in less than 35 days. And now we've got two things that investors don't know how to discount. One is, mounting tensions in the Middle East, and then a port strike that is potentially going to cripple the economy. And so I think that as investors worry about this, if we get a dip, and a big dip, I think you still want to buy that dip because the setup into year end has a lot of tailwinds.
The worst case scenario.
All right. So, like I said up front, I'm starting to like his commentary right now. Never been a huge fan of his, never followed his commentary. I mean, I saw some clips in the past when he's talking about Bitcoin. But here, I agree. I totally agree that this is a very tricky period, very precarious period for markets. There's a lot of, I would call them headwinds, and that is recessionary indicators. Okay. But there's also a lot of tailwinds. So the headwinds, I would say, is the recessionary pressure, unemployment slightly rising, the Fed having to cut. That can be seen as both positive or a negative. We also have uncertainty around the election. Are we going to even make it to election? Are both candidates going to make it to the election? Is there going to be a war where they suspend the election? There is a lot of uncertainty around that election. War is usually kind of seen as a negative. People talk about the geopolitical risk and how certain geopolitical hedges, what you expect to happen from different asset classes. But typically, war is positive for the stock market. So, and the port strike he mentioned. So there's a lot of things that can be both headwinds or tailwinds. Very precarious period. And lastly, the Fed has started to cut rates. So is that going to be positive for Bitcoin? Is that going to be positive for stocks? Will it turn into being negative because, there's out of, let's say, 10 of the last times the Fed started cutting rates, recession followed in a majority of them. So not all of them. That's important for the uncertainty factor. But yeah, there is a precarious time here at the end of Q3 going into Q4, and very, very tricky to know what comes next. But overall, we can know by looking at certain assets like that aren't quite fitting the mold. So, for example, to decrease our uncertainty about the geopolitical tensions, we can look at oil. Oil is down and it's weak, lower highs now for a long period of time, breaking that 1 year long trend, testing it from the bottom below the 50-day moving average. So overall, oil looks weak, and I don't think it would be weak if we really had high geopolitical tensions. So it feels like high geopolitical tensions. It's taking up a lot of headlines, but is it real? Is it actually going to escalate and snowball into a regional war, into a world war, or whatever the case is? And right now, the price of oil can mitigate a lot of our uncertainty about that risk. So as you start going down this path, I think that you're going to find that this uncertainty is unwarranted. So what's going to happen is, as soon as that uncertainty starts to get cleared up by the market, people move throughout October and they're like, okay, things are getting less uncertain. It's not as bad. What's going to happen? A lot of interest, a lot of pent up demand and pressure is going to be put back onto the market. And we're going to see a rally in Bitcoin and stocks. That's what I think for the rest of October. But let's listen to the rest of this interview.
Area for the port situation is something that we've seen. And we shut down an economy already, and that was probably a time to buy. We know that. So we've seen that movie before. Could it be? I can't imagine it could be as bad as the pandemic, but we have shut down an economy before.
Yeah, that's right. So I think it creates headline risk because, the longer this strike lasts, there'll be companies that miss, and so S&P earnings might get downgraded or some stocks might miss results. But that's all just temporary. I mean, those are just short-term headwinds because it doesn't change the long-term outlook.
Very strange that I don't remember any war.
Temporary headwinds, but not long-term outlook. That's going to be important for my geopolitical risk article that we're going to cover here in a second.
That where the effects, and we've been through quite a few back in the 90s and in the 2000s. It never seemed to have as negative an effect on the overall markets as we thought at the beginning of each.
That's right. In fact, if we look at the last 6 sort of global wars or tensions, you almost always buy the invasion. The exception was 2022 with the Russia-Ukraine war because we were also in the midst of a Fed tightening cycle. So that was not a buy the invasion event. But the other times you did want to buy.
Both Iraq wars.
Yep.
Well, the Russian war was not like directly U.S. involvement. Yes, we are involved, but it's not like the Iraq war where we are direct expeditionary force in that conflict. So interesting dichotomy there. And I would put that as heightened geopolitical risk. If we take a look again at the oil chart, let me just go back here. So if we share this again, and let's just get rid of some of these things I just drew. Okay. So get rid of that 50-day moving average. So here I have these events outlined on the chart. So this is the kickoff, February 24th of 2022. And you can see what happened prior to that. Yes, we were recovering from COVID. We were recovering from these negative prices that we had in oil. But, it didn't mean that we had to recover all the way up here. We could have recovered, come down, formed a higher low, come up. We could have meandered more, but pretty much this was a straight line up and to the right into that geopolitical event. You see what I'm talking about here? The market magically knows. The market is magic, people. It knew that something was happening. It knew that something was coming. And especially with Russia being a dominant oil producer, that market participants knew something was going to happen. These are very, very sophisticated markets, very, very sophisticated investors, very, very sophisticated supply chains. I mean, and they knew something was going on. And so what happened? The market priced it in up to $95 a barrel, by the way. And then we saw that acting as support until kind of the tensions died down. Okay. Then it acted as resistance here a couple times, and it acted as resistance one more time if we come over here to the Israel-Gaza situation, which also, if you look at this situation, we built up into that. The market knew. The market is smart. The market is deep. It is sophisticated. Somebody knew about Hamas. I wonder who could know about Hamas. Maybe some other oil producers? Maybe other oil market participants? Important oil market participants? Yes. At least had an inkling or a feeling that something was rising, that there was geopolitical tension or there was some sort of tension rising. But it went up back into this 95 level, which is very important, and turned over. All right. Then we go to the Israel-Iran first buildup. As we're building up over weeks, look what happens. Then there's a scare for a few days. It crescendoed on, say, Thursday and Friday, and then it was over and it fell down. Nothing happened from there. And now let's take a look at this in terms of this Iran missile strike. What does this buildup tell you? It tells me that it's not as significant as people are making it out to be. Okay. I think the entire world is kind of holding their breath about the US elections. And I don't know if Iran wants to start any funny business going on here. Obviously, the market doesn't think so. So that's how I kind of look at it. All right, let's go back to Tom Lee.
Both Iraq and
Was the
So, I mean,
market,
this could be the
where was
same.
the market before that happened? Had levels come down, or were they trading at near highs or at highs?
yes, this is different because we are hovering near highs and we're in an extended market.
And things aren't cheap in terms of multiples.
That's right. But at the same time, we also know there is a lot of cash on the sidelines
Right.
because margin debt hasn't risen for 4 months. I mean, that's pretty unusual with a rising stock market. And now money market cash has actually been rising at a time when the Fed is cutting. So I do think there's firepower.
That's a very interesting point there at the end. Cash on the sidelines. A lot of times people say that's like a poo-poo argument, that you can't really tell that. Well, he's talking about margin debt. That would be credit lines. These credit lines are untapped. They're not growing for 4 months in a rising market, which he says is unusual. And then the money market funds. So usually people are putting money into money market funds and getting that 5% interest rate instead of holding cash in their bank or even higher risk assets. And now, as the Fed is cutting, most people expected money to come out of the money market funds and go into other assets like stocks. But no, he's saying we're seeing an increase in money market funds. And so there is dry powder on the sidelines to rotate out back into stocks. Now, they were also mentioning their high valuations. Stocks and Bitcoin, rolling into Bitcoin. But higher valuations doesn't really matter. Okay. Doesn't really matter. All the rules kind of are broken here at the end of this giant credit bubble that we've been living through for the last 50 years, longer than I have been alive. And, you know, things are going to get wacky. Things are going to get very wacky before we go through a cleansing period. And this election coming up in 35 days, less than 35 days, is going to be a milestone in that trajectory. Where are we going? So very, very interesting. Okay, last thing I want to do today is check this article out that I wrote on bitcoinandmarkets.com. Let me see if there's any other comments. Tomek says audio is good. Thank you. Yes, Bodhi. You say isn't buy the invasion because global liquidity increases with war. Yes, but that kind of runs counter to the narrative of increasing geopolitical risk. So in a period of increasing geopolitical risk assets should suffer. Okay. But that runs counter to what you said there, is that people think that it's rising liquidity because there's a higher government spending. So those are two competing ideas there. Okay, let's go into this Bitcoin Minute. You guys can subscribe to the free tier and get all of this, all these posts that I put out, all except the premium post that goes out usually on Fridays to the professional tier. But I wanted to recover this because obviously in the wake of those attacks, a lot of people were talking about Bitcoin not being a geopolitical hedge. I did write about this last year at this time, and I kind of cleaned it up and made it a little bit more smooth. But here I just start off saying, it's not just Bitcoiners that are talking about this as a geopolitical hedge. It's BlackRock. Here's their key points from their recent thing. It's a hedge about global monetary concerns, geopolitical concerns, U.S. fiscal concerns, and U.S. political concerns. So then bring it into yesterday. Bitcoin's price did dip, but it drew the predictable reactions from mediocre macro commentators. Some claimed Bitcoin dipped as geopolitical tensions spiked, and that is a misunderstanding of both the nature of geopolitical hedging and the complexity of geopolitical risk itself. And let's get into that. So there's different types of hedging. There's one that most people think of hedging, and that is a tactical hedge. Okay, I'm renamed these this time. We'll see if this type of vocabulary sticks. But I used to, last year I called it a mechanical hedge or a general hedge. But I think this is a little bit more intuitive, and that is a tactical hedge. And that is an asset that responds directly and immediately to specific market events. That's what these commentators want. They want, when there is some specific market event, that these things move immediately. Okay? Within the day. And most of these type of tactical hedges, they move because they're inherently designed to respond to those specific events. They're often inversely correlated to other assets by construction. So they're created to do that. For instance, the corn farmer is naturally long the price of corn, but he can hedge his risk with short positions in corn futures. All right. So that is a tactical hedge. Now, that is what most of these guys are going off of, this idea of hedging. They might have a kind of mixed up view of what a hedge is, or maybe a more sophisticated view than me. I don't know, but I'm just saying this is how I understand it. So a strategic hedge, though, that is an asset that is uncorrelated to everything. It is uncorrelated to these short-term market events. It's doing its own thing. Bitcoin is a perfect example of a strategic hedge that is uncorrelated, generally speaking, and doing its own thing. Okay. Strategic hedges are used by investors to protect against systemic risks because they are uncorrelated. Everything else can crash, but they will maintain their value because they're uncorrelated, because the assets maintain or increase value over the long term, regardless of short term volatility. Some assets like oil act as a combination of both strategies. And I kind of walked you through that chart there. Oil is subject to wild price swings in the short term, but also displays long term trends associated with broader risk levels. Assessing geopolitical risk. Another critical aspect that macro pundits often miss is understanding when something constitutes true geopolitical risk. While they typically use market pricing to gauge this, they tend to focus on short-term tactical price movements. So they'll look at, oh, the price of gold is green on the day. Let's look at the 5-minute chart. What happened? Oh, it spiked. So that is a true there is geopolitical risk because we expect gold to go up. And gold did go up immediately. Okay. That's the short-term focus. But geopolitical hedges should be looked at the longer term, strategic price concerns. Systemic risks rarely appear out of nowhere. So if we just think about this current Israeli Middle East conflict that's going on, it didn't just happen yesterday. It's been growing or escalating for a year now. And again, some could argue much longer than a year, because you can go look up this conflict. It's been going on since, the 70s. Okay, for example, during periods of heightened risk, a geopolitical hedge may not spike in value during a specific event. Instead, it may increase in relative value over a longer period as the situation escalates and more investors seek uncorrelated assets like Bitcoin. The Iran-Israel situation is a perfect example. The attacks did not come out of nowhere. This particular situation has been building. Okay, so you can see it knows if this whole year we would be up if there was rising tensions. As demonstrated in the oil price chart above, since the start of the Israel-Hamas conflict, oil prices have generally weakened, showing lower highs and recently breaking a year-long support level. Although oil prices spiked slightly yesterday, it doesn't negate the broader trend. Okay, now here's Bitcoin. Bitcoin's role as geopolitical hedge should not be judged by short-term price movements following specific events. Instead, it functions as a strategic hedge, offering protection over the long term as systemic risks gradually develop. The recent acknowledgement by BlackRock only strengthens Bitcoin's status as a hedge against multiple forms of instability, including geopolitical risk, monetary instability, and financial concerns. Okay, so that is the post that I put out today. Dex Invictus back with us. Any other comments or questions, guys? Quickly put it into the chat because I will be signing out here quickly. Guys, if you're watching on YouTube and Rumble, if you're watching on Twitter, I'm going out on YouTube and Rumble. I would appreciate it if you guys jumped over there real quick, subscribed, comment, help the channel grow, help this unique, contrarian, and quite accurate macro and Bitcoin commentary to get out there to more people. So appreciate that. All right, checking. I know there's a slight delay. There's like at least a 10-second delay between when I speak and what comes out on the streaming platform. So I'll give it a second, see if there's any other quick comments. Appreciate, I've had a little bit of uptick here in the paid subscriptions over there on Bitcoin and Markets, so I appreciate that, guys. Oh, before I go, let's check out the October price forecast competition. So if you are a $5 member on the website, you can enter this our price forecast competitions for each month, and the closest person will win $20 in sats. And so you can see we have a winner every month. This one is going out to people, to the form for people to fill out. And also, if I go to this other page, let me go to the Hall of Fame. So all of our winners get up on the Hall of Fame. And we've been running this since 2019. And you can see how many winners we've had here on a monthly basis. No Less, I don't know if No Less is still around the community or not. He was a big Discord member. He went on a streak. DT won it this last month in September. He is up there now at most winning. Also, Dave S. He's been coming in strong. He won like 4 out of the last 6. So he's been coming on strong. But you can see if you win, you can get your pseudonym or your name or whatever up here with a little wizard next to your name. And we have all of the people listed here down below. So it's a fun little thing for members over there on bitcoinandmarkets.com. You guys can check it out. Tomek says, anything on yesterday's debate? Yeah, I talked about it up front. Just a little bit. I think it's a milestone for what's going on. I thought Vance did very well. But yeah, just rewind it and you can see that. All right, 159 people watching. Let's get over there to YouTube and Rumble. Like, comment, subscribe. All right, that's it for Wednesday, 5 p.m. Eastern right now. So good time to sign out. Thank you guys for joining me. Hope you are having a great week. Halfway through. Hopefully Bitcoin can bounce here on the 50-day moving average and we can go up and have, start our Uptober events. But all right, guys, we'll see you on the next one. Bye.